able to do what you want. You think I'm a thing.
Okay, good morning here, guys. Let's switch views here. Go to our student view. Oh shoot, it's not changing anything. Here we go. Refresh this. Okay. We'll go over these here in a minute. Hide these for a second. All right. So we're going to go over today divergences, right? Welcome. Sorry, guys. Welcome here. Smarter Options. Ice King here. Okay, so regular and hidden divergence. First of all, regular divergence is when we find we have these indicators, right? And I'm going to go over them here, but just so you guys know, regular divergence is when we're looking at a trend to change. Okay, this is how we look that it looks like it's going to be going bull or it's going to be going bear. While a hidden divergence, and these are called hidden because they're just harder to spot to people that don't look for them, but hidden divergences actually are what would show a trend continuation. So it would show you that when a bounce is just a bounce and it's going to continue down or continue up, right? For some of you guys watching, if this is blurry at all, it will get better after the upload in a couple hours here when YouTube has got it all done. When it's live, it's a little fuzzy, so I apologize. All right. So a bullish divergence is when your price is getting. Okay, let me back up here a minute. To find a divergence, you need price action, and then you need a momentum oscillator. Okay, momentum oscillators. There's lots out there. You guys can Google this after I'm done. And you can play with different ones, but you could use CCI, you could use RSI, you could use Stoic, Williams %R. There's lots. Okay, MACD, which is what we're going to use today, just because as you guys know, I really enjoy the MACD. Okay, so a bullish divergence is when the price is getting lower lows and the oscillator is getting higher lows. Okay, so they don't agree. And then a bearish regular divergence is when the price is getting higher highs, but the oscillator is getting lower highs. Okay, and what that just shows you is that even though the price is getting higher, so like on the bear one, right, when you're getting higher highs, so the bulls are in charge, but the oscillator is getting lower highs, which means that their bulls are getting exhausted, which is why it can be signs of a trend reversal. Okay, and the exact opposite on the bears, when you're getting higher highs but lower highs. Oh, that's when they're getting worn out. When you're getting lower lows, but the oscillator is getting higher lows that's how you get a bull divergence. It's easier just to find some examples here. So let's go to the 1 hour chart here on Apple, and we'll just start kind of looking here. And here's a perfect example right here. Now, when you're looking at an oscillator, when you're looking at especially the MACD oscillator, hang on one second. I'm just going to hide we're going to hide that MACD leader for right now. Okay. So here we see that price action is going up. So when I say that you can either go off the MACD or you can go off the histogram. Okay. And divergences can be over different times. Right. But here would be a divergence. So we're getting lower highs, right? But we're getting higher highs on the stock price. Okay. So higher highs, lower highs. This is a bearish divergence. And actually, we could draw several in between here, right? So we could do one from here to here also. So let's just draw that on the chart. It's the same time frame, okay? So in this, if we zoom in here on this lower, on the smaller divergence, okay, here was a, oops, take this back a little further. Okay, so here you can see we were higher highs, lower highs. Okay, right after that divergence, we came down. Now we are using pre-market data right now, which I could turn that off if you guys want. But it did come down. Now I suppose if you were playing this, if you were playing options, this wouldn't really work because we're looking at pre-market data also, and it fell during pre-market hours. Let's look real quick here at this divergence. Same thing, right? But we had this longer divergence. Right after that divergence, it went up just a little bit higher, but then we had a nice fall. Okay, we're going to turn off pre-market data so we can look more about how we trade, right, for options. Let me get rid of some of these lines here. This is for me charting stuff out. Okay, now let's find another divergence here. Well, here's the one we were just looking at. So now you can see this little divergence isn't really relevant anymore. Okay, so here, so we have lower highs forming while the stock has been climbing like crazy up to a top here of 175, right? And we had to pull back to 171. That wasn't really very much, but your divergences are going to depend on what time frame you're on. So if you want to see bigger divergences, you got to go to higher time frames. Some of you guys have been watching daily with his big gains in his retirement account. That's because he's been looking at divergences. That's how a lot of times he tells it, it's a double top or something like that, because he sees a bearish divergence forming. Okay, so let's just go to, let's just say the 4-hour here, and let's find another divergence. Now, like I said, now this is no longer relevant. See, I mean, this is that divergence we just looked at on a smaller scale, but now that we're bigger, it doesn't really compare. Okay, just got to find a divergence here. Here's one. Here's a bullish divergence. Okay, so here, right here, we're getting lower lows, but we're getting lower lows, okay? But here we're getting higher lows. This is a bullish regular divergence. And sure enough, the stock turned after that. Okay. So this is where you identify. So this would have been a good place to take a call option, right? We see this. Now, it may not play out right away. I mean, and this is where the choppiness kind of happens, right? But I mean, if you would have bought this anywhere between 138 and 142, and this is over the course of several days, because this is on October 4th and it came back down on October 13th. So this is where you would take a longer play, like maybe something 2 months out, but it went from 139 up to 153. Okay. So that is an example of divergence. Here we're getting lower lows, lower lows. That's not a divergence. That's just playing out correctly. Okay. Here we had a lower high and then a higher high. Those line up. That's not a divergence. We need to find it where they don't agree. Okay. Let's see here. And you can go back a ways. You can find bigger ones. Let's look here real quick. Here we go. Here's more of a bearish divergence. Okay. Here's a high. So this is increasing upward. Meanwhile, during that same time, we were going down. This is a bearish divergence. Okay. This is where we can show that this is where you would take in a put, because this got much higher, but the price did not. So that shows that the bulls were wearing out. This is the sign of a trend reversal right here. Okay. You could have noticed that on February 2nd, and you could have hit lows on March 14th, a little over a month later. The price stopped from 177 down to 149. Okay. So this is how you find divergences. Okay, now meanwhile, same thing. Here we were angling down. Okay, but at the same time, this did not line up from that peak to that peak. Right, so this is a bullish divergence. And sure enough, we got a new higher high. Okay, this is how we can play pivots. And you can see that you can play this at all different times. I mean, you can go through and you can find divergences. No, that's angling the same way. Let's go look at some other stock options, some other stocks. Let's go look at Amazon. If you guys have any questions, feel free to hit up in comments. What's up, your pal Joe? What's up, BTC? I like that you're on here. You want to come on? I can give you a pass if you want to come in and chat. Hang on a second here. I'm going to send it to you in Discord, BTC. If you want to join, please feel free. You can come chat with me about divergences. Send it to you right now. If you want to join, up to you. Don't feel pressured. Okay, so Amazon here. Okay, here we were getting lower lows, but getting higher lows on the oscillator. This is a regular bullish divergence. And sure enough, we went from 266 up to 340, 3,400. Okay, hit the low on March 7th, hit the high on March 29th. This is, like I said, this is where you'd want to play out longer plays, not weeklies. Okay, now this will work on lower time frames, but just not as well. Price action can change really quick, right? I mean, that'd be more for like scalping. You want to do swings and options. This is, you want to look at higher time frames, 2 hour, 4 hour. You can even go to day. Okay. But anyway, this is how you play. But I said, so a few weeks ago or a week ago, when Amazon took that really big fall and it rocketed up for a minute, right? I think daily was down 80% on his option, but he held it. And then he was next day, all of a sudden he's in the money, 500, 600%. That was because his divergence, he was looking at the divergence. Okay. Not what was going on in, with the price action. I mean, well, price action and like an oscillator, right? So that's what he's looking for. Where would you enter? Well, yeah, as soon as you would enter, as soon as you see that this is the low. So as soon as it starts to turn, right, and you have this setup, that's where you would enter. And you would hold it unless, like I said, and you buy some time, okay, because you don't know, like I said, this took from March 8th to March 29th, so it took 3 weeks to play out, okay? What if this had turned right here and then it started going lower? Well, as long as it doesn't create a new lower low, that would be when you're staying in. Now your option could go down, but you have time, so it doesn't burn. You're not getting premium burn. You're actually losing, real value. But as long as this doesn't go and create a lower low, your bullish divergence setup is still valid. And that's why sometimes you'll see daily, some of these guys don't exit because their divergence is still playing out. But you hear Amina all the time say there's a bullish div setting up. There's a, bearish div setting up. you'll see the price going up, and you know, you may not understand what she's talking about, but she's using, I don't know which oscillator she's using, and I don't know what time frame she's looking at, but that's what she's looking at. So here's a bearish div. Look, so right here to right here, okay, and during that same time frame, we went up. Now, by the time you realize that this was happening, this is a pretty fast drop. Okay, so let's realistically look at this and see what our entry would have been if we were looking at this right here. Okay, so we see this. By the time we see that change, maybe you caught it right here, right at 32.14. And you say you entered right here because you saw it dropping and you set it up and like, okay, that's holding, that's a bearish div, which a bearish div should create a new low. Okay, so new low, so your low is down here, or at least go back to the previous lows, right? So your previous lows were down here at 29.04. You're entering in at 3,200. Okay, a few days in, you would have been $150 the wrong side of the trade, but your bearish div is still set up correctly. Okay, and sure enough, it played out. And so from September 10th to September 21st, over the next 11 days, you fell and you were back in the, you know, all of a sudden you're back in the money and then you're winning. Okay. And Brian, I'm glad that you're here. I'm glad this is making more sense to you. But this is what I said. So whenever Daily keeps telling you guys like, this is a fake out, this is a river, you know, and we're not always correct. This does not always work. Okay. But more times than not, it will work. So let's see here. See if we can find another one. No, that was going up. That was working out correctly. Here's a bearish div right here. Okay, we got a new higher high. Oh no, I'm sorry. That's higher high. That's not bearish div. I apologize. I don't know what I was thinking there for a second. Here we go. I already pointed this one out. That's a bullish div. Okay, so from here to here, we're getting lower lows, but we were getting higher lows down here. Okay, and you can see there's two here. First, it went to right here, and sure enough, we got a little pop, but then it came back down. You can extend this out, see that your bearish or your bullish div is still set up correctly. So say you entered up here on February 25th. Well, hell, a couple weeks later, you're a loss, but your bullish div setup is still correct. This is where you would average down. Okay. And then it rocketed back up to a new high of 34.50. Okay. And you entered in at 31.11. So you still got a good, 300-point run up, but you had to suffer through some losses first. Like I said, as soon as this bottom held and your div still set up correctly, this is where you would have averaged down your play and you would have still won. Okay, I need to find a hidden divergence now. Where we're getting okay, so a bearish div is when you're getting, so here we were getting higher lows, but we were getting lower highs. Okay, so our lows are increasingly going up, but we're getting lower highs. I know this is silly, but this is a bullish hidden divergence. This is a sign of a continuation. Okay, so that when it came down here, we're getting higher lows, but we're getting lower highs. This is where you need to train yourself, because a lot of people will mistake hidden divergences for regular divergences, right? But this is a hidden bullish divergence. Lower highs. Oh, hang on. Am I saying that right? Or lower lows, I mean. Lower lows. I'm doing this one wrong. Hang on. God damn it. higher lows. We're getting higher lows right here, and then we're getting lower lows. This is what I'm talking about right here. I'm sorry, I was on the wrong side of the chart. Here. From here to here. That is a bullish continuation. So I'm so sorry. Not lower highs. Lower lows, higher lows is a bearish divergence. Or a bullish. Fuck me. I'm going to confuse all you motherfuckers. I'm so sorry. Okay. This is a hidden bullish divergence. Sign of a continuation. Higher lows, but lower lows on the oscillator. Okay. Sign of continuation up. Oh my goodness gracious. Okay. Let's go look at a different stock. Start this over again. My God. Anything you guys want to look at? Any stocks you guys want to look at while we're doing this? We can knock out 2 birds with 1 stone. If you guys want, I'm gonna have to do this video again just because I messed that up so bad right there. I should have wrote this down before I started doing a video on it. Okay. Let's find a divergence here. Okay, here's one. So from here to here, we had lower highs. Okay. Oh no, that's not right. That's not one. Or yeah. Okay, so here we're getting lower highs. This is a hidden divergence. This is a bearish hidden divergence. We're getting lower highs, but we're getting higher highs on the oscillator. This is a hidden bearish divergence, which is a sign of a bearish continuance. And we kept going down. Okay. Bearish hidden divergence. I will send a note in the channel here just describing hidden and giving you guys the outlines for a regular bullish and bearish and a hidden bullish and bearish divergence. Okay. Let's see here. Let's go to the 1-day chart and look at some 1-day. Let's look at some bigger ones. These would be more for, like I said, leaps. Okay, here's a bearish divergence, regular divergence. We're getting lower highs, but we were getting higher highs on the chart. Okay, same time frame. And there you go. All right, so I've added a couple things to this chart. You guys go play with this. Do another. We'll keep going over this in the mornings. We'll keep looking at some different things. Okay. Here's a bearish divergence right here. Okay. We're getting lower highs, but on the histogram, we were getting higher highs. Okay. That is a bearish divergence. And sure enough, from February 14th at 158 to March 14th, 1 month later, we were at 129. And then hell, now we are down even lower. Okay. This is also, yeah. I'm sorry, this is a hidden bearish continuation. Hidden bearish continuation, because we're getting no, we're getting lower highs. Lower highs on the, and then we're getting higher highs. Yeah, this is a bearish continuation, hidden bearish continuation. Okay, you guys got to chart this out ahead of time, because like I said, I'm sitting here going through it and I'm getting mixed up in my own head here. You got to chart this stuff out ahead of time. That's what most people do, right? You start looking for this stuff and you look for these setups, and you have plenty of time. You don't look for this stuff on the fly, because you can sit there on the weekends and chart this stuff out and see where the stock is probably going. Okay. Right now, we are probably setting up for, let's see here, we're getting their lows. No, that doesn't count. I'm going to send some chart setups for you guys in the education channel after this. I'll take some screenshots and send you guys some. And you guys want to look at real quick, because I'm going to redo this video. I'm doing terrible. Let's see here. Here was a bullish divergence, higher lows. Okay. No, it's not actually. Oh yeah, here we go. Here we were getting higher lows or higher highs. Okay, we're getting higher highs. And then here we were getting lower highs. Okay, this is a sign of a bearish regular divergence right here. Higher highs, lower highs, bearish divergence. Joe, you ever do this much? Do you ever do bullish, bearish divergences? Do you chart that out much when you trade? Here we're getting lower highs, so that pans right out. That's correct. So there's no divergence there. There was one right there. Or wait, yeah, that's getting lower lows. So here's a bullish divergence. Okay. We were getting lower lows. Actually, there's just right there. Lower lows, but higher lows. Okay. That is a bullish divergence. And we went from 132 to 157. Where should we enter? Break of a pivot. Yes, that's correct, Matt. Like I said, guys, go practice charting this out. I will draw some out and post them for you guys. If there's any stocks you guys want to look at real quick here. Once again, regular bullish divergence. The price action, lower lows. Oscillator, higher lows. Bearish regular divergence. Price would be getting higher highs, and oscillator would be getting lower highs. Hidden divergence, which is signs of a continuation. A bullish hidden divergence or bullish continuation. Higher lows on the price action, but lower lows on the oscillator. And a bearish hidden divergence, the price is getting lower highs and the oscillator is getting higher highs. Okay. So let's go back a ways. Here's a big time bullish divergence. Okay, so you can go back a ways. Actually, let's go to let's just put the 2-day chart up so we can get this all in. Okay, and this is what I'm talking about, guys. This can go, you can do this, and this will show you the magnitude of what the move should be. Here is a low to a higher low. Okay, but the oscillator during the same time frame got a massively lower low. Price action was higher. This is a sign of a massive regular bullish divergence. And once again, you guys can look at this and see that this should have been a point. And like I said, maybe you didn't notice it until right here. That's fine. By the magnitude of this, you can tell that the move should be pretty big coming up. And from May 6th, 2020, for the whole next year, look, and this is a long divergence. So you knew this was going to take a while. This would be a leap. Okay. We ran up big time over the next year. Okay. This works on multiple different time frames. Okay, now this one isn't done yet. But you had one right there, right? Okay. It did bounce a little bit, but now we're getting a new setup here. But anyway, you guys can do this. You guys can chart this out. You can see what works, what doesn't work. Let's look at Netflix real quick. Let's see if I can not script Netflix. Let's go back to the 4-hour chart. Oh, and then I'm going to show you guys some other indicators up on here for you to make this a little easier for you. Okay. This is actually a bullish div setting up right here because we're getting lower lows. Okay, lower lows. But we're getting higher lows on the oscillator. So there is a bullish div setting up on Netflix on the 4-hour chart. Okay. Which shows us as this gets up here. So this would be a good time for, according to this, this looks like this is a good time for longs. We have really low lows, but we have higher lows down here. Let's look at anything else we can find. PayPal. Same thing. We're getting a bullish div. Okay. We're getting lower lows. But we were getting higher lows. Okay. This is the sign of a bullish div setting up. Let's look at Microsoft. Here was a bullish div. Okay. Lower lows. Higher lows. And like I said, each time this did work out. So, to here, this one right here still worked out because it was a low of 270. Even if you caught it up here at 288, it ran up to 305. Okay. Then you had another one or a continuation of that div. Came back down. We got a new lower low, but we got a new higher low. And we rocketed it back up even higher. Okay. Let's see where. Here is a bearish div. We got a higher high. And actually, we got a higher high on the histogram. And we had a higher high on the MACD. So there's really, I mean, you got two right there. Okay. Same period. Oh, actually, no, that's not right. No, those are the same direction. That's not a div. That's just properly working out. Okay, bullish div. This is just a continuation. You can see here we were getting lower highs. That matches right up. Just trying to see if I can find any more here. Okay, here we are. Here we were getting higher highs. Okay, but getting lower highs. That's a bearish div. Oops, sorry. I meant to put that right here. Okay. That's a bearish div. And sure enough, we fell. Oh, that lines up. Let's see if we can find a bearish continuation there. Nope, can't really find a. I can't find a hidden divergence there. Let's see if we can find a continuation going on here. Nothing yet. Here was a bearish hidden continuation right here because we have higher highs on the oscillator. Okay, but we got lower highs right here. That's a hidden bearish divergence. That's a continuation divergence. Not very big, but it still played out. From the two highest peaks. I'm not sure what you mean there, Brian. You can send me a DM if you want. I'll go over it with you privately. All right, guys, that's it. So this is the student view. Oh, the two indicators real quick I got for you. Okay, just to help out a little bit. First one is, oh, we already have that one. That's that. Which that remembers too. Okay, so there's this one. This is a MACD, div, and MTF. Okay, this just helps you see. Now this is for the 1 hour chart specifically. This bottom one is. So you go to the 1 hour chart. Okay, it's got H and R. Okay, H1 is for hour, 2 is for, I believe, the 4 hour, and then 3 is for the day chart. This is looking at 3 different charts. Okay, so right here it says R2. That's a regular divergence on the 4 hour chart. Came up. Right here, we have a hidden divergence on the, or no, we have a regular bearish divergence, but we have 2 hidden bullish divergences that kind of came at the same time. So anyway, it had more bullish. It did run up. Bearish divergence right here on the 4 hour chart, came down. So this right here will help you spot divergences without looking at them, okay? Like I said, go try and find them, but this will help you. Another one I put on here is this simple one, which should fairly line up, but this puts a line up. So if the price is below, that should be a hidden divergence, or that should be a bearish divergence. If it's above, a bullish divergence. Below is a bearish divergence, still going down. If it gets above, it did run up for a day, but that was, not real. And then you would have switched right here, bearish divergence, bullish divergence, bearish divergence. Okay, this is a divergence line. I don't know quite how this is coded, but I went through several stocks and it does seem to work pretty well, especially if you're going to like the 1 day chart, right? Go to the 1 day chart. This helps you see bigger. So as soon as we drop below that line, and several days later, lower. Here we got above, but it wasn't real. So you would have to switch here. This one's probably not as good. Like I said, go to the 1 hour chart. I really like this one down here. I'm going to hide this one here quick. Like I said, so we're on the 1 hour chart. Here's a hidden bullish divergence. And we ran up. Hidden bullish divergence. Here was a bearish divergence. And sure enough, we fell. Bullish divergence, we rose. Bearish divergence, we fell. Okay. And right here, we are getting a hidden bullish divergence set up on Microsoft. Let's go look at Amazon. So I took some time to find a chart, guys, that I thought would help you guys. Here's a regular divergence setting up on the 1 hour chart. It ran up. Hidden divergence on the 1 hour chart right here, and we fell. Okay. You want bigger moves, look for the 2 or the 3s. For example, here was a hidden 1 and 2. It ran up. Here was a hidden bearish divergence, and sure enough, it fell. We got a bullish divergence. It rose, and then we got 2 bearish divergences. And even though it came up, it still played out correctly. Okay. On this drop, which how fair is that, right? I mean, you think the stock's already down, but on this fall, there was still a hidden bearish divergence, and it still played out quite well because from April 29th to May 2nd, right, the stock still fell from 2262 down to, or I'm sorry, not 2262, from 2600 down to 2377. So just check this out. But like I said, hidden divergence down, bullish divergence up. But like I said, we really want to see some bullish divergences form on the 4 hour or the 1 day chart to see that this is coming back, and this will continue on to be a bullish divergence. All right, guys. Which I do get a feeling a bullish div will be setting up because, well, for example, right here, okay, we're getting lower lows, but we're getting higher lows on the chart. That is the signs of a bear or of a bullish divergence. Okay, guys, everybody have a good day, good weekend. Probably do another video on this, make it a little bit cleaner and better with pre-drawn out divergences, just so that I can go over this with you guys. Like I said, I feel like I butchered this pretty bad today, so I do apologize. I should have prepared. I was just I keep seeing Amina talk about divergence. I've had some people ask me what a divergence is, and so I just thought I would do a video on it. Okay. All right, guys. Enjoy your weekend. Follow-up video coming up.